of SVB UK.
Thank you.
Thank you. Rushanara.
Thank you very much. Just to follow up on ring fencing, Sir John Vickers said that, in my view, removing ring fencing would pose a very great risk to financial stability. Do you all agree with that?
Yes.
Everybody agrees?
Yes.
Yeah.
He also then, this was in evidence to questions I asked in the session he came to, he also said that there was something said in Sir Keith's report and also in the Edinburgh reforms package announced by the government that while it is worth retaining ring fence for now, there might come a day when resolution can do the job instead. That is the wrong approach. Do you all agree with that?
Yeah, I mean, I think okay, what Sam just said. I think resolution and ring fencing are complements rather than alternatives.
Okay.
Right.
But so I mean, it's quite a serious point that he's raising, isn't he? That we should all be alert and vigilant about in terms of where the government's heading. Not least because of the recent turbulence, it brings it into sharp focus. The Chancellor's giving evidence tomorrow, so I think it will be important for us to make sure that the route that we go down in terms of tweaking for improvement is one thing, complementarity, a set of tools that you can use, deploy, is one thing, but quite another in terms of what the government has written in black and white, saying that Sir John Vickers is raising alarm bells about.
But to be, I mean, just to be clear on where the process is, the government got the got the Skeoch review, and then the follow-up in terms of this question of the what we consider to be the complementarity between the two regimes. That's a call for evidence. So the government's clear that there's an opportunity for people to feed in all the relevant evidence.
Well, I'm a bit more sceptical with respect about where the government is on this and where you are. So we'd be really, we want to make sure that the experts' opinions are taken seriously, and the architects of ring fencing, their warnings are heeded by the government in the rush to pursue reforms that may be problematic. That's all. I just wanted to put that on the record. Going on to Credit Suisse and the wider implications. Governor, were you surprised by the decision of the Swiss authorities to provide some relief to equity holders of Credit Suisse, but to fully write down the more senior 81 debt holders?
Well, I have to say I don't know we don't know all the circumstances and the situation that the Swiss authorities faced. I mean, we know quite a lot of it, but we don't know all of it. There is, as I think Dave was saying earlier, there is a resolution plan for Credit Suisse, which is agreed internationally. That is the backstop resolution plan. The Swiss then, as you can do, implemented something ahead of that, as it were, instead of that.
Yep.
Now, what I would say is this. As I understand it, the Credit Suisse 81 bonds have a different contractual clause in them to, I think, most other 81 bonds, and I can certainly tell you than 81 bonds issued by UK banks, in that they have a clause in which allows this contractual wipeout, if you like, to take place under certain circumstances. I'm not going to go further than that because no doubt there will be lots of law cases in Switzerland to challenge it, but that's my understanding of it.
And how important is the 81 market for financial stability in the UK?
Well, just to add, we were very clear on the Monday after the Swiss authorities made their announcement to set out very clearly the position with UK banks 81 bonds and how the creditor hierarchy would be preserved and maintained. It was very important, I think, for our market to set that out.
And if I could just say, I mean, the reason, I'll be absolutely straightforward with you, the reason that our banks have not issued them goes back probably about a decade. And we did, in the best sense of the term, frown on some suggestions that it might be included, because I do think, and I'd probably take a different view on this, that it does complicate things because it makes the creditor hierarchy more complicated and probably less intuitive. So we did not want our banks doing that. But I know Credit Suisse did it, and therefore it is a contractual provision, as I understand it, that they have.
Sad, did you want to add anything?
Well, just to say,
point
the
about financial
distinction
stability.
Andrew's making is between the version of these bonds which converts into equity,
Yeah.
which, as Andrew said, is almost entirely what we have in our market, and these ones that wipe out. Because if you have the wipeout ones, then in a sense you have a bit of inverted creditor hierarchy built into the system, because they are designed to wipe out while there's still some capital left in the bank. And we'd always thought the other version was more desirable for the hierarchy reason.
And the statement that we made last week on Monday, and indeed the Euro area authorities made a similar statement, was to emphasise that in a resolution, one of the cardinal principles is that you stick to the creditor hierarchy. Now, I'm not saying the Swiss didn't do that, because they had this different contractual provision, but we wanted to emphasise that in any resolution we will always abide by the creditor hierarchy, because that's a cardinal principle.
As we did with the SVB
SVB.
UK resolution.
Okay, thank you. Bill Winters of Standard Chartered Bank, Chief Exec said, the big question is how do you wipe out $17 billion of 81 in a solvent bank without a review process? I think it has had very profound implications for the regulation of banks and for the way banks manage themselves. Do you think he has a point?
Well, I think you have to come back to the fact that, as I understand it, these 81 bonds had that contractual provision in their terms, and therefore I would assume that investors who bought them understood that that was the case. And of course that was the basis on which the Swiss acted. I think.
Anyone else? Sorry, carry on.
No, go on.
Keep going.
Well, I was going to say, I think obviously you could see that it did cause a disturbance in the 81 market, and that is why, in good part, we and the authorities in the Eurosystem made the statement that we did, because we were very, very clear that we had to emphasise the basis on which we have to treat them in any resolution to clear any confusion up over that.
So you would agree with him then?
Well, I think the situation in Credit Suisse, I think again, it's a matter for the Swiss authorities, because it comes back to a point I made a few moments ago, which is they will have had to judge, looking forwards, the solvency and viability of the bank and what capital protection was required to affect the transaction with UBS. Rather, of course, as we had to do with Silicon Valley Bank UK, actually.
Well, exactly, and that's a much bigger institution. Doesn't that send some alarm bells in terms of a pattern and a series of chain, the sort of things that can happen in terms of how regulators then have to respond on a case-by-case basis?
No, I would, if I might come in.
Sure.
Look, the bigger picture here is we had a very large international bank which had reached the end of the road in terms of its viability. Something had to be done that weekend for sure. And in the end, the Swiss authorities found a way to stabilise the situation, which involved a purchaser, it involved some losses being taken by holders of the higher risk end of the bond stack.
Okay.
And by the way, of course, shareholders in Credit Suisse have had a pretty rough ride as well. Shareholders have had a pretty rough ride as well. And look, I think we should expect that with the variety of our new tools, we ought to be able to take care of these situations short of a bailout, which is the answer we had last time around.
And it does go back, to the question that the chair almost started with. We were in a situation and as Andrew was just saying, of both overall volatility of markets, but also real volatility in particular segments, such as the 81 market. We remain very vigilant. Yeah. We're certainly not complacent, but things are calmer than they were that Monday, and the pattern of previous, or certainly financial crises I've been involved in, is the way that things mushroom. And other things happen. We haven't seen.
Sure. I'm just trying to understand I'm trying to understand whether you agree or disagree with this statement. I think it has very profound implications for the regulation of banks and for the way banks manage themselves. It can't be that difficult to just directly answer that question.
Well, if you don't mind, I've great deal of respect for Bill Winters, but one point I would disagree with him on, or challenge him on, in what he wrote in that article, is that I think he said the bank is solvent, but in another part of the article he questioned its viability. That you can't compartmentalize those two judgments. I mean, they are part and parcel of the overall judgment. If a bank isn't viable, then it might be solvent in sort of a sort of, you know, as of today in a sort of, you know, moment in time. But if you question its viability going forwards, then you're essentially questioning its solvency going forwards, actually.
Right. Okay.
And you have to say, if everybody thought the bank was solvent, why was it having a run?
I'm just trying to get a straight answer.
Yeah. Well, that's the challenge.
I
I don't think it's as simple as Bill sets it out to be.
Yeah. Okay. Just one final question. How much of the $17 billion of Credit Suisse AT1 bonds were held in the UK?
Well, I don't know. What I can tell you is that the FCA many years ago banned UK retail investors buying AT1 bonds because they felt they were too complex. So they should not be in the retail sector in the UK. Can't say beyond that.
I mean, the key thing for us to run down in this situation is what are the exposures of the UK banks and UK insurance companies, and they were minimal.
And also, I mean,
minimal.
You know, these are quite complex, relatively sophisticated financial instruments. So you would imagine that the people who do hold them are aware of the risks, and you know that is also taken account of to some extent in the yields that they get on them.
Thank you.
Thank you, Rushanara.